A very interesting IPO is about to open this Wednesday on the 28th of July. It's a large issue which will give the company, which is to be listed in a few weeks, a market cap of between 6 to 7,000 crores. But it's not about the size, but more about the uniqueness of the company which is set to debut in the Indian markets. It's India's first microfinance institution and probably only the world's second microfinance institution to go public. The first one, of course, was the Mexican company Compartamos, and now probably, I will be corrected if I'm wrong, but SKS Microfinance is only the world's second microfinance company of any size to go public. Now, a microfinance company might be compared with NBFCs and lending institutions, but the business model is vastly different in terms of the spreads, the risks, the interest rates charged, and the kind of universe it reaches out to. All look very, very different from the traditional NBFCs which are listed in the Indian space. To talk about this issue, the pros and cons of it, and whether it presents an investment opportunity for you, Vikram Akula, founder and chairman of SKS Microfinance, and Uday Kotak, executive vice chairman and managing director of Kotak Mahindra Bank, in his capacity as lead manager to the issue and also as a banker who's seen this business from up very close. So, gentlemen, thanks very much for joining me. Vikram, let me start by asking the most fundamental of questions. Since this is a different beast, a new kind of beast which is coming to the market for the first time, can you start by laying out the essential differences as you see it between a microfinance company and the traditional NBFC or the finance company, which we have quite a few listed in India?
Uday, as you said, this is a vastly different type of stock. This is very much a concept stock. And what we do in microfinance is, yes, we're looking to provide financial services to the poor, but the ultimate mission of doing that is that this is a means of helping them have the financial tools to slowly earn income and step-by-step get out of poverty. So in that sense, many of the metrics in financial services don't necessarily apply to this type of business.
The apprehension, while the objective everyone lauds, the apprehension, Vikram, would be is where do you draw the line between the social objective and the profit objective, because your investors would get in purely driven by the profit objectives.
Well, we think that this new generation of microfinance actually ties both the commercial and the social quite well. As you know, Professor Muhammad Yunus of the Grameen Bank founded the concept of microfinance and the concept of using groups and lending to the poor through a group lending mechanism. What we've done as a new generation of microfinance is actually show that through a commercial approach you can actually raise significantly more capital and put more money in the hands of more poor women. And in so doing, we actually think there's no conflict between the social and the commercial. In addition, because of the way in which we use our distribution channel to do just not credit, but a wide range of financial products, you actually can bring a whole range of products to the poor at a low cost relative to their other options, and in so doing create social value. Now, the numbers also speak for themselves for the investor side. This is a hugely profitable business, and we deliberately structure it that way because we want investors to continue to put more and more money into the hands of the poor.
Uday, what do you think? Is the market ready for this concept?
Udayan, I think let me just first step back and say that one of our jobs as bankers and investment bankers in India is to present to the capital markets the new and emerging opportunities which come out. We normally like to do it with sector leaders because that's the best way of presenting a new emerging sector to the capital markets. If you recollect, a few years ago, we did it in real estate with DLF, and thereafter, of course, you've seen the whole sector in the capital markets. And we believe microfinance is a new emerging sector in India, and we are really delighted to get that sector introduced to the capital markets with the market leader in that sector, which is SKS Microfinance. Now, coming to the issue about the challenges of this sector and the opportunities. My first belief is that what SKS and the sector is demonstrating is what is good for the poor can be also profitable. And this is the very important aspect which SKS Microfinance has demonstrated if you look at its performance over the last few years. And this is the opportunity where you're saying that a huge amount of poor in this country, and here is a business model which serves a social objective and is a profitable business. And obviously, SKS as the market leader has demonstrated quality, and we are therefore happy to bring a company of this scale, size and quality to the public markets. Of course, the challenge is that how do you make sure that these standards of what is appropriate for capital markets get maintained as the sector opens up to the capital markets.
The first apprehension, Uday, automatically, and you would appreciate that as a banker, that would be of recovery of capital, would be of asset quality, because you're reaching out to a social strata which is not the strongest. Of course, the interest rates charged are commensurately higher, but there is that issue of whether you could be stuck with a lot of delinquencies and a huge amount of non-performing assets. Is that a legitimate fear that people may have about this, or does the data suggest that it's not as sticky or thorny a problem as people would figure it out to be?
I think the data so far suggests that the levels of delinquencies are pretty low. However, the journey of a sector is measured over long periods of time, and therefore I am happy that we are coming to the capital markets with the best known, high quality and the largest microfinance company in India. And this is a classic opening up of the sector, and you want to make sure that you come with quality. The numbers and the statistics are extremely robust at this stage, and I would like to believe that if you are the right management team, which SKS Microfinance under Vikram and his team have demonstrated, there seems to be a very significant opportunity, provided continuing execution is as what the markets, capital markets would like to see.
As you scale up the business, do you see that as one of the most legitimate challenges?
Sure. Now, to the contrary, what we find is that the poor are extraordinarily robust, extraordinarily good borrowers. We've seen in a 12-year history net NPAs of 0.33%. That's less than 0.5% is the net NPAs. And this is, mind you, giving collateral-free, that's unsecured loans to the poor. I think the lesson here is that till now as a country we haven't given the poor a chance. We haven't given them the due respect that they earn, and the way in which we've done so at SKS Microfinance shows that if you do put faith in the poor, they are extraordinarily hardworking, they're resilient, they're entrepreneurial, and they've paid back 15,000 crore rupees with a 99.5% repayment rate. That is very different than anything we've seen in any other conventional banking. And the reason why, this is simply not about banking. This is about creating social capital. These are groups that support each other, that are there for each other, and in so doing, you get this extraordinarily high, asset quality. So I think it's very different from banking in that sense, and I think that if we do give the poor a chance, really, truly give them an opportunity, you'll see that they are quite capable, quite resilient, quite hardworking, and do have an ethic to repay the loans that they take.
How scalable is this business, Vikram? I mean, on a small base, of course, you've scaled it up to significant size. It's almost 1,000 crores of top line that has been delivered on the last disclosed numbers. But from here, how rapidly can you scale this up?
So if you look at our numbers today, 6.8 million clients, close to $1 billion portfolio outstanding. I think that in itself is larger than some banks in the country. It's certainly by account size the largest NBFC in the country. So we've already proven as a sector that you can have tremendous growth. But what's even more exciting from a business perspective is that if you look at the penetration, we've only served about 15% of the clients, the poor households in the country, which we estimated about 150 million poor households, and only 22 million are served. Now, if you combine that with SKS's historical track record, a PAT growth, 5-year growth of 223%, a client growth of 141%, a portfolio growth of 162%, you see that here you've got a company in SKS Microfinance that has a demonstrated capability, and you have a significant growth opportunity. So from a commercial perspective, we see nothing but continued opportunities to serve more poor households and to grow this business.
Uday, comment on that. I mean, if the business does offer such kind of scalability, but the numbers that Vikram is talking about, touching 6.8 million accounts, $1 billion portfolio, why would banks not want to cover up this space? I mean, would it be because of lack of adequate regulatory structures on their half? Because why can't the State Bank of India do quite effortlessly what Vikram is doing?
Udayan, first let me say, as a bank, we are truly delighted financing the sector, especially companies of the quality of SKS, and therefore as a bank, we consider that itself as a good opportunity going forward. Moving on from there, for banks to be doing it directly, I think one of the things which is a challenge for banks is the ability to handle that ticket size and cost to serve, and deep inroads into the social networks which companies like SKS have demonstrated. Therefore, ability to operate at that ticket size in social networks and make it work is the USP of the microfinance institutions as it stands today. And banks will obviously need to do a lot of work to be able to effectively do what companies like SKS have done. And therefore, credit to Vikram and his team for seeing an opportunity and being able to bring it at the ticket size and cost per ticket, which is truly enormous.
Vikram, do you see public sector banks as competition for you? Because while private sector banks might have some imperatives or constraints for which they might not enter your space, I mean, the regional public sector banks, even rural banks, do you see them as competition?
No, in fact, we don't see our work as competitive when it comes to the state-run regional rural bank network, the PSU banks. In fact, we see what we do as a complement to the tremendous effort that those banks have done in terms of financial inclusion. Now, the thing is, those banks, while they do provide loans and oftentimes subsidize loans to the poor, what we do know is that the loans are not sufficient. The loans are not large enough so that the poor can actually take up income-generating, activities. And what we do, we see ourselves as complementing that. In addition, we do have one significant advantage, which is we do a last-mile delivery to the poor. All our transactions, all our delivery are doorstep. We actually go to villages, and that's where these transactions happen. Now, from the perspective of the poor, that's very significant because typically, if you have to go to a state-run bank, if you think about the number of trips you have to make to a bank branch, the lost wages, the bus fares, the food charges, sometimes the fees, the broker's fees involved in writing applications for an illiterate person, basically all of those things no longer exist when we do microfinance at the doorstep. So even from their perspective, this is a very competitive offering. Having said that, since there is such a need, we actually see ourselves as complementing the work of the state-run regional rural banks towards financial inclusion.
At this point, a quick break. Keep watching. We're back in a